we believe in good communication because we don't want the clients that we work with to be average. And the average investor jumps out.
Right.
And they accept the potential losses of the downturn on their portfolio. And then what they do is they run the risk of not being back and exposed to the market or having growth-oriented investments in their portfolio, which it has shown that coming out of these times in which we've just referenced, that if you missed just the 10 best days of a market recovery, just the 10 best days of a market recovery, your return is, I mean, we're talking almost around 40% lower than it should be if you would have stayed the course. Now, if you miss the 40 best days and you just aren't confident and are making those knee-jerk reactions, you're talking a significantly less return.
Right.
And you're making yourself an average investor. And we don't. That's why we believe in strong communication, because during these times that we just mentioned, people do get worried.
Right. And, it's this is going to sound, I'm usually considered the wet blanket in the office, right? I'm the one that looks at, hey, what's worst case scenario here and starts there. But, trying to find opportunity in the markets like this and there's many ways to do that. Stocks are at a better price now than they ever were. So what that tells me is if you have money to invest, it's a good time to start looking for opportunity there. It's a good time to reevaluate if you truly are an aggressive investor, or if you're feeling okay right now, maybe you don't have enough risk in your portfolio, and it'd be possibly a good time with stock valuations possibly down to consider maybe adding some more stocks to your portfolio. But if it's if this is keeping you up at night, need to find the opportunistic time maybe to consider taking some of the volatility out of your portfolio.
Right.
Other things is to look at your savings, or you will know probably in the next 3 to 6 months if you're having to dip into your investments while they're down, you probably don't have enough savings to be investing like you are to begin with, and that's something you need to have a discussion with your advisor to, how can I weather these times like this, because they inevitably, like we've discussed, will happen.
Right, right. They will. We can't control the returns of the market. I mean, we don't. The return is something an investor can't control.
Right.
But they can control three things: their time horizon, knowing how long you have the money you have invested earmarked, and then also what risk tolerance. Knowing that allows you to stay the course of your predetermined plan even through these market conditions, and then it allows you to control your behavior, which is possibly the biggest thing for an investor to do, and that allows you to avoid that panic sale mentality.
Right.
Because panicking is not a plan. You don't want to do that. So.
I hear you say this all the time, knowledge is power. Well, I think knowing these terms, that they are kind of normal things that happen. You can't really predict when they're going to happen. All you can predict is that they will happen.
Right. And
investing with that in mind, and knowing that it's not the end of the world when a bear market happens, or and then inevitably when there's a bear market, there'll be a bull market. I think that helps you come out, like you said, be a better than average and a successful investor when you approach things in that manner.
Right. Well, we got anything else?
No, I think we've covered that. No more scary terms. The biggest thing you always tell people, I hear you saying, is just turn the TV off or watch something that's entertaining that is not news.
Yes.
Which is also basically just entertainment these days.
Exactly, because if entertainment is not something that causes you to worry and stress.
Right.
Turn that off and watch something that is actually entertaining.